Hi, it's Larry Gaines from OptionsOnTheOpen.com. We are the leaders in option day trading, and it is our goal to make you consistent, impressive returns trading options every day. Well, I just wanted to go over this video and just find out kind of where the markets are headed. As a trader, it's important to step back and review the big picture of the markets. You don't want to keep just charging ahead without knowing from a historic and technical perspective where the markets are. This analysis is invaluable, for it will help you plan how to trade the markets. Should you be extremely aggressive and increase your long portfolio allocation to the market? Should you be more cautious and reduce your long portfolio? Should you increase your hedges? Should you shorten your time horizons on trades? These are just a few of the questions I will address for my trading. I want to have a plan and not be totally blindsided by the market. Right now I'm in more of a cautious mode and hedging all my positions. So let's just kind of take a view of the broad markets and see what the picture looks like. First off, when I'm looking at the broad markets, I like to really step back and look at the long-term charts for a big picture perspective. So I will start with the monthly chart. This is the S&P 500 index, and this is a monthly chart. So each bar that you see here, each bar represents one whole month. Now, as you step back, there is seasonality to markets, and in the past, February and March have been periods where you can get market corrections. So looking at this long-term chart of the S&P 500, I put in here these down arrows represent where February is. So right here, this is February of 2009. You can see that the market did move down before it headed back up. And here's 2008. Hold on. This is February of 10 last year, and we did have a correction down. 2009 we had a correction down. 2008 we had a correction down. 2007, here's February, it went sideways. 2006 the market corrected down, and 2005 the market corrected down. Here's 2005 and here's 2004. So basically we did get corrections in these years around March. So that's one signal that I look for. Now the next thing I want to look at, is I'll put retracement lines in, and the Fibonacci retracements are a great way to look to see where price action is and where it hits support and resistance. A lot of technicians look at Fibonacci retracements, so I will put those in. So basically, for Fibonacci, you just take the high of a move, the prior move, take the low of the move, and you draw in the different retracements. There's a 236, 382, 50%, 6180, and 7640. Now what you can see, and it's fairly dramatic, you can see here that when we did get up to the 386, we flew right through it, hit the 50, and then retraced back actually. Well, actually here you went all the way up to 618, retraced all the way back to 382. And that was in 2010. This was that major correction last year that started like in April, May. So then, the first time up, it couldn't get through, corrected. Second time up, just blew right through. So here we are right now, and you can see this has been a very steep move to the upside. It's been a fantastic market, and it's still a fantastic market. We're in a long-term trend. The market looks good. So right here, this is the next resistance level that we're in based on price action here, and this comes in at 13.14, 13.13, and that's almost where we are on the close Friday. We closed Friday at 13.1087. So we're at this resistance point here. Come Monday or this coming week, we'll see how it reacts around this number. We could get a pullback here and then plow back right through it. Now the other thing to keep in mind is that we are in earnings seasons, and during earnings season, when you have good earnings, this is a catalyst and it gives momentum to the market. So within the next 2 weeks, we'll pretty much be out of earnings season. So you have to ask yourself the question: where's the next momentum or big catalyst going to come from for the markets? So that could lessen the momentum in the markets. So be aware of that. So the next chart we'll look at first, we looked at this monthly. We get a picture of where the broad market is. The next thing I do is I go to a weekly. Now on this weekly, I'll point out a couple things that are also a little bit of red flags or cautious signals or indicators to me. Here's the relative strength indicator, and it's something to pay attention to. It's not an indicator I watch all the time, but when it gets up here and it gives you this little indicator here that it's way overbought, it's good to know that that we are in an overbought position, which markets can stay in for some time. But just be aware of it. As you can see here, when we got to this level here, the market did correct and had a pretty decent little correction, and then consolidated, worked that overbought situation up, and then moved higher. And that's what markets need to do. They need to breathe. They need to rest. So here we are again. So to me, that's a little cautious flag there. Now here's the 1313 level. We get through that. The next level is 1359, and this level will be a pretty big level because it's another Fibonacci level. It's the 7640% retracement. So that could be a pretty big resistance level, but if we get through 1313, it should just plow right back up to that level there. So keep an eye on 1313, keep an eye on this RSI. We could get a little bit of correction pull back here. First line is 1273 right in here, and then it's back down to the 618 retracement on the Fibonacci. So the next chart, we'll look at the daily. Now here's the daily of the S&P 500, the SPX. The other thing that you need to always be aware of are the moving averages, and I like to use the EMA moving average, exponential moving averages. They weigh more of the current price action, and market technicians will look at the 20-day, the 50, the 100. A lot of them look at a 150 and a 200. So as you can see, we're in a major uptrend. We're above all the moving averages. But the first line in the sand will be this 20-day moving average, which we came down here, held, went back up. Down here in November last year, we came down, broke the 20, but we held the 50. So be aware at all times when you're trading where these moving averages are. This is the main point, or the main points that I wanted to point out for the broad markets. So we've come a long way. The market does tend to need breathing time at times, so I'm looking for potential correction, but they don't always come when you think that they will come, so just be aware and watch your indicators. I hope this helps you out in your trading. Have a great week, and if you would like to learn more and get more guidance for your trading, come join us at optionsontheopen.com. That's optionsontheopen.com, and thank you for your time.